Hello, and welcome back, guys. Today we're going to be taking a look at Meta Platforms or Facebook, a company that went down about 4% Friday after the Jerome Powell remarks about the economy, where the whole stock market pretty much kind of crashed for the day. Now, before I begin this video, I wanted to mention a new perk, a new benefit that our Patreons get, and you can kind of see it here. I have been asked about it quite a lot. People have been asking me to make a spreadsheet in which I will be adding pretty much the analysis of the companies that I'm doing in an easy to find and an easy to see spreadsheet here. And it will be pretty much a sort of like a summary or a portfolio of all the nice stocks that I'm taking a look at, and they may be interesting for a purchase with the dates and everything, of course, and some remarks as well. Like, for instance, as you'll see here, there's quite a breakdown of what I have seen for Apple, and the next one is Meta, which I have already added, and it's what we're going to be discussing in this video. Now, of course, remember that you can become a patron. You can visit this link here, Investors Heaven, that is, Patreon page, and gain access to our tool and this spreadsheet, as well as any other benefits that I'm planning to do for our patrons in the future. So, yeah, let's go back and take a look at what is going on with Meta. Now, Meta over here, as you'll see, they have agreed to settle Cambridge Analytica pretty much. Remember the data privacy lawsuit was like 2 years ago or so. And some other news pieces here. A key leader for Meta's metaverse software is leaving the company, is another thing that we are seeing here. And let's go back to the metrics page, because then we can actually see what the company did Friday, and you will see 4% down, sitting at near $162 over here, which is an amazing price. And why is this an amazing price? First of all, it's been down 58%, but that's not the important thing. The important thing lies on what the company is doing financially. And you can see here in its key metrics that the P ratio of the company is sitting at 13, almost 14 here. P price to free cash flow even lower at 11. And outstanding shares that are going down and will keep going down, because we know that the company will be buying back shares. You can kind of take a look at the 5-year chart of an amazing company like Meta here, which is going down and down, potentially giving some nice entry points here to people who are interested in the company. And you will see the total liabilities to free cash flow sitting at 1. Pretty much the company can pay back all their total liabilities in 1 year, or last year's free cash flow. And still, even though the company is huge and has been growing tremendously, they still keep growing. Of course, there is a little bit of a slump that we do know about based on the recent earnings report for the quarters, the last couple of quarters or so. This is going to happen. This is normal with a lot of companies, especially in the current economic environment where everything is pretty much down after all the lockdowns, COVID and everything. But overall, we are still looking at a company that is fantastic in the amount of cash that they are making, and pretty much the financials here. And it's personally, and as I've said it in many videos in the past, it's my largest holding. Now, you will see here a software company with large net income margins here. They will be going up and down again a little bit these days, but for the most part, they are pretty amazing. Great returns on equity here, and a company that's extremely solvent. They don't have a lot of debt, very little really. Now, in terms of the analysis page, we will first take a look at, I'll say, the financial statement. The income statement first is going to come first, and you will see 40 billion to 118 billion. That's pretty nice, right? I mean, that's a threefold increase almost. This is amazing. And in terms of the net income, again, almost a threefold increase, a little bit less, from 16 to 40 billion almost here. So amazing growth for the company. Now, you will notice that their balance sheet has been also climbing instead of their total equity, from 74 billion to 125 billion, and 41 billion in total liabilities. And as you can see here, taking a quick look at our cash flow statement, you will see that their free cash flow is almost 40 billion. This is why they can pay all their total liabilities just by using last year's free cash flow, which is pretty amazing. In terms of operating cash flow here, you will see that it has been increasing and doubling pretty much itself, for a little bit more than that, from 2017, again sitting at 57 billion here, with about 10 billion, 9.1 in stock-based compensation, and a little bit of depreciation amortization going on. It happens with these kind of huge companies, of course, that they will be having some numbers of this sort. In terms of financing, repurchasing common stock is the trend here, is the norm, and that's something that you should love as an investor. I do myself for sure, holding Facebook here, Meta, I should say. Okay, so in terms of other things about the company, let's examine some other details. So, like for instance, over here, what do analysts think about the company? Let's take a little bit of a look. And you will see here that analysts are pretty much very bullish here for the company, apart from maybe like one over here. But overall, you see is like a sea of green here, expecting price targets near more than $200 really, which makes a ton of sense. I would say that fair value is probably around 250 or 300, but we will see the exact value actually of Facebook when we take a look at the stock evaluation tool. Now let's take a little bit of another look into other things that revolve around the company here. Our tool actually has a lot of stuff here that we can be taking a look at. You can kind of see here, for instance, the insider trades, which appear to be very similar from 6 months ago, pretty much. So not much movement going on. Not any real purchases here, but what you want to be looking at, as I've explained in previous videos, you want to be looking at extraordinary sales, like some executive here selling out of all their stock, which we don't really see happening. It's for the most part a percentage of what they own. For the most part, it's actually a small percentage of what they own. So these things are looking good here. And generally speaking, you want to be seeing the CFO or the Chief Financial Officer, in case they are over here, as you can see, Wehner David, because they do know a lot about the financials of the company. It pays to see what they are doing in terms of their stock. Are they selling out of a lot of their stock? Are they actually still keeping a lot? And you will see here that the Chief Financial Officer of Facebook seems to be holding on a lot of stock still, and just actually selling some of his restricted stock units, just a little bit though, which is part of their compensation. They don't seem that they want to be pretty much selling out of all their stock here, especially as we're approaching August. As you'll see here, they seem to be actually, these are all August, but they seem to be selling less and less, frankly, with these kinds of transactions over here. So they don't sell a lot overall. Okay, so next thing, I want to take a little bit of a look here at what is going on with the price of the stock. As we are ending the video, I always take a look at the evaluation of the company itself, like is it a buy and at what price. And of course, remember that I'm also adding that in our new pretty much benefit here for Patreons. You can actually see that in detail over here later at your time. You can basically come over here and use this for whatever purpose you want. It can be a nice little diary really as well. So the revenue that the company has been achieving has been amazing. Of course, the revenue growth, 34% on average, but we won't go that high. We do know that there's going to be a little bit of a slump, so I'm going to attempt to go lower. So I'm going to go much lower, 8, 10, and 12 here. This is very little growth compared to what the company has been doing, and it's probably very easily achievable for Facebook. In terms of net income margins, again, I'm going to go somewhere in between. Company has been doing an average of 34. I'm going to go again in between, with 34 being my highest, actually. 34 being my highest, and it's not really the average. The average is a little bit more even. Now, the free cash flow margin sitting at 95% on average, and I'm going to go 90, 95, and 100 here. I'm going to add a little bit more over here to our last high, because I actually removed a little bit of the net income margin, and the revenue is still pretty conservative. In terms of annual return, I'm gonna go 13%, which is typical, very typical for the companies that I'm actually analyzing, because I want to be making a little bit more than 10%, which is the average that an S&P 500 ETF makes. Like if you just buy the index fund, you're gonna be making about 10%. So the moment you actually buy into any single companies, any single stock, you have more risk than buying a basket of stocks that the market is, the index fund is, with very little fees as well, almost negligible fees. So yeah, you do want to be making at least 10%, and frankly speaking, more than like 13 to 15% for any single stocks. We hit calculate here, and what are we getting? You will see that with these kinds of projections, we are super green here. Our current price is, again, I think, a gift to investors, frankly. It's very low, and it's currently Meta, using these projections, is a company that is worth about 220 to 327 dollars per share, pretty much. Again, based on the cash that they are making, and based on these kinds of projections, which are still fairly, I'd say, they are not too confident at all. They are kind of potentially even a little bit pessimistic here. I do expect that in the next 5 years the company could grow even more actually per year. I wouldn't be surprised at all, especially if the metaverse does well. I wouldn't be surprised if the company achieves 20%, for example. It wouldn't be surprising at all, in which case we're looking at a much higher value. Just to try that, let's just try that here and see, with these kind of projections and pretty high margins and free cash flow margins as well, which are kind of normal for the usual thing that the company makes, we're sitting at $450. Now, I'm not saying that this is the this is the actual price of the stock that the stock is actually worth today, because I think this is probably a little bit expensive. But again, we're doing this as an exercise in order to see what kind of value the stock has based on this kind of different scenarios here. And this is a scenario that could still happen. It's not out of the question. It's not that weird, of course, at all. Okay, so thank you for watching. Tell me what you think about Meta, and if you are not a member here, if you're not a subscriber, feel free to become one. We'd love to have you around, and please like the video if you did enjoy this kind of analysis, and I'll see you in the next one. In the meantime, take a look at this other video that I made yesterday. It's about Apple. It's a similar analysis, and again, you can find all the information about Apple here too in our news sheet. And I'll see you soon in the next video. Bye bye.